Welcome back, class. Let's teach you guys about little AMD po3 power of 3. So how po3 is mainly used for how it works is, you can see here a classic example is, let's just say this one. This candle here, it opens right here, it manipulates higher, and then it displaces lower down here, and then it closes a bit higher. So this is open, high, low, close, and then it's the opposite for a bullish candle. It's open, low, high, close. It's basically one-to-one with AMD, which is just accumulation. We can see on the lower time frame. So how it plays out is most commonly at 10 a.m. every day, which is the most commonly used one. It's the new 4-hour candle. So usually what happens is at 10 a.m. that's when the strategy plays out. There's going to be an accumulation, which we actually see over here. It usually happens either during 10, shortly after 10, or like within 30 minutes. So on Friday, it played out around 10:17 to about yeah, down there. So yeah, so what happens is after 10 hits, you want to look for an accumulation that's happening, which is right here. It's just a, hold on, yeah, so this is our accumulation here. Let's just okay, sure, this is our accumulation here, and we expect price to go lower to yeah, we expect price to be bearish, so we're going to be looking for a manipulation upwards. And how we find that manipulation, so we have a bullish manipulation, and then distributes bearish, and yeah, it's just gonna accumulate forever like this until it breaks out of that range. Usually you want to look at these accumulations on the 1 minute, 2 minutes, and 3 minute. I think, in my opinion, shows the AMD the best. So I think in this case, the 2 minute, or actually, well, yeah, it's the 1 minute, but yeah, here. So what we want to do is we anticipate price to manipulate upwards. So we use our standard deviation, right? Project it on this leg. Honestly, like it's usually about five like candles, the accumulation. It looks like very similar to this a lot of the days that it forms, and this plays out literally every single day. So this is a strategy in itself. But yeah, we use standard deviation on this little leg here. This is not even a manipulation leg, this is just accumulation, but we take what we can. So it's this low and this high, and we just project it, and it projects to up here, which it tags us in, and then displaces downwards. So we use this leg, and we can also use this body, this body, and this body, and maybe even this body. And you can see we can use we can project this too. And yeah, so you can see we get this area around here. Mark it out for you. Oh shit, okay. You guys see it, but yeah, I'll be marking out the AMD for you guys to see. This will be the manipulation. This part is the manipulation, so we see it breaks out of the range on this candle, and then it reverses. And then it displaces all the way down there. We'll get to that later. That green. Yeah, so this is what it typically looks like. AMD. It's pretty similar to how the market maker model works. But yeah, anyways, we anticipate manipulation to go into this area or somewhere in this area. So we want to look for confluences, right? So we have this 1 minute fair value gap CE right here, or 1 minute fair value gap, and then go on to the 5 minute. What other confluences do we have? We have the 5 minute fair value gap. So you want to look for high time frame confluences that it could potentially manipulate into. Typically it is on the 15 minute or 1 hour. We try to look for confluences, but as you can see, there is not much. There's not much here. Maybe up here, but we don't want price going up that high because of structure. So we have either this area. We pretty much only have this area, this 5 minute CISD, or this 5 minute CISD. There's not a lot to work with, and those did not line up very well at all with our standard deviation. So we can eliminate those possibilities and you can also look on different time frames, like the 2 minute. 2 minute has a much wider fair value gap, and we actually have this order block here now. So we have this order block, 2 minute order block, and you can start to see these confluences are stacking up here. And this 3 minute fair value gap CE, and you can see that's actually the very top. 4 minute, you get the point, another fair value gap. And you can start to see that just all of these confluences line up here, or fair value gaps, order blocks, see it, yeah, order block, whatever. They all line up here, so you take an entry on, honestly, wherever you want to risk. I would probably enter on the 1 minute fair value gap CE that's in the 5 minute fair value gap. I really like that. Enter there, and bam, you're in. And now you wanna project like usual. So in this case, our AMD we look at is on the 1 minute. So we want to project on this leg, the 1 minute leg, and it always takes the accumulation low in this case, or the high if it's a bullish AMD, and project it downwards, and you can see when we use our model, it's the lines right here. So TP, okay, let's just delete this. Look out of here. Alright. Oh shit, I deleted everything. Alright, whatever. Bam. Literally the only TP based off of our model, and that's 214 points. Easily. Bam. That's pretty much it for AMD. Yeah, that can be your model every day. Yep. Goodbye.